Hi, I'm John Prasinos, Editorial Director of Investing Daily, with a video update for Monday, November 23. I'm confident we'll witness economic growth and a bull stock market in 2021, but between now and then, the road will get bumpy. Last week, positive coronavirus vaccine news propelled stocks to new record highs, but the alarming spike in COVID-19 cases throughout the country caused the rally to fizzle. Sector rotation accelerated last week as investors gained greater confidence in economic prospects for 2021. The U.S. presidential election is still being contested, but business and financial leaders have moved on. Wall Street sees the election in the rearview mirror with the assumption that Joe Biden will be the next president. Economically sensitive sectors last week, such as energy and financials, outperformed, whereas those that have benefited from the pandemic, such as technology and telecommunications, lagged. Oil prices rose amid expectations that the economic recovery would boost energy demand. Rotation last week also occurred across asset classes, with small cap and international investments outperforming large caps. Investment strategies were affected as well, with value outperforming growth. The following graphic tells the story. I expect the movement into economically sensitive cyclical industries to continue for the rest of 2020 and into 2021. Economic prospects for next year are indeed bright, but we probably face a rough 2020 holiday season. Investment conditions may get worse before they get better. The crucial holiday shopping season is upon us. As retailers reimpose social distancing strictures due to rising COVID-19 cases, it's unclear how many people will actually show up at physical stores. The combination of a rampant plague and high unemployment is likely to dampen consumer spending across the board, perhaps even the e-commerce activity that has increasingly supplanted bricks-and-mortar spending. By the end of December, millions of Americans could lose their unemployment benefits unless Congress agrees on new coronavirus relief legislation. Take a look at my second graphic. Unless lawmakers in Washington put aside their differences and quickly act, millions of Americans will find themselves destitute this winter as the pandemic gets worse. To be sure, the number of people receiving unemployment benefits through regular state programs has declined to 6.45 million from a peak of more than 22 million in May. However, 13 million Americans still rely on aid provided through supplemental programs because many who lost their jobs during the first wave of the pandemic have exhausted their conventional unemployment insurance benefits. And yet the news isn't all gloomy. Corporate earnings in the third quarter have been stronger than expected. The industries reporting the largest year-over-year dollar level increases in third quarter earnings are interactive media and services, software, and automobiles. Take a look at the following chart. Even if Congress in the waning days of 2020 can't get its act together, President-elect Joe Biden has vowed to push for new fiscal stimulus as soon as possible, with substantial unemployment assistance and infrastructure spending included. Corporate earnings are expected to return to healthy growth in the first quarter of 2021. And if the Republicans retain control of the Senate, history shows that divided government isn't necessarily an impediment to getting major initiatives passed. So, where should you put your money under a Biden administration in 2021? Among the sectors that I particularly like, infrastructure. You can expect massive fiscal stimulus next year that includes significant expenditures on the nation's crumbling infrastructure systems. Public works spending is a global theme. Publicly traded construction firms with international footprints will thrive. And as I mentioned earlier in this video, beaten down cyclical sectors such as energy should gain traction as stock market laggards turn into stock market leaders. Well, that's it for now. Thanks for watching. If you have any questions or feedback, you can reach me at mailbag@investingdaily.com. In the meantime, have a happy Thanksgiving and stay safe.